Welcome back once again to my channel. I am so delighted, I am so grateful to welcome you once again to my channel. So in today's video, I am going to be sharing with you a powerful strategy that you can use to generate consistent income from the forex market. Remember that in my previous videos, I share with you back-tested strategies that I use trading the forex market. And like I said, you are going to get different types of strategies that you can implement in different market conditions for you to be able to make money from the forex market. So in today's video, I'm going to be showing you how to identify high probability trend reversal pattern and ride massive trends. You are going to learn the most powerful trend reversal pattern that will help you to ride massive trend. So in this video, you'll be able to understand the most powerful and most high probability trend reversal pattern in the forex market. With this pattern, you'll be able to ride massive trend. So with this pattern, you will know when a trend is about to end, and you'll be among those to start a new trend. Just imagine that you're among those traders to start a new trend. Think of how you are going to ride a massive trend. Remember the risk to reward ratio, because you are risking low and you are getting higher. That is the power of this strategy. So this strategy helps you to minimize your money because you are risking low and earning higher. So I want you to sit tight, watch this video from the beginning till the end, because this video is going to be a gold mine. You are going to learn the most high probability trend reversal pattern that will help you to identify when a trend ends and when a new trend is about to start, so that you can hop in and ride the trend. So I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. So they say trend is your friend, right? And you are only meant to trade in the direction of the trend. So now what happens if you enter the market and you discover that the trend has gone too high or too deep, right? And you're waiting for a reversal, right? Because you know that if you join the trend, maybe it won't take you to anywhere and the trend will reverse. So what do? You wait for reversal. So the question now is, how do you identify when a trend is about to reverse? How do you know when a trend is about to change direction, right? So this is what you are going to learn from this video. You are going to learn how to identify a trend reversal using some chart pattern that has almost 90% high probability win rate. Because with this strategy, you are going to have more than 90% win rate, right? Because this strategy, I have back tested it countless number of times, and I must tell you the fact that this strategy is highly profitable. So the chart pattern that we're going to be discussing in this video is the head and shoulder pattern, the inverse head and shoulder pattern, then the double top pattern, and the double bottom pattern. So this powerful chart pattern will help you to identify when a trend is about to end and when a new trend is about to begin, so that you don't enter the market in the wrong way, so that you don't enter the market when the trend has already moved against you. You enter the market when the trend is about to start. Now let's start with the head and shoulder pattern. There's one thing I want you to understand in this video. I want to make everything as simple as possible for you guys to understand everything, right? So that is why I want you to listen attentively, so that you don't miss what I'm talking about. Now we have what we call the head and shoulder pattern. Now the head and shoulder pattern is a reversal pattern from uptrend to downtrend, right? Now with this head and shoulder pattern, you'll be able to know when an uptrend is about to end and when a new downtrend is about to begin. Then remember that when an uptrend is in progress, we have what we call the higher high and the higher low. So this is what we call the higher high and this is what we call the higher low, right? The higher high. So this is what we call the higher high and the higher low. We also have the higher high and the higher low. Now, how do you identify that the trend is about to change direction? We identify that the trend is about to change direction when the price stops making higher high and higher low, right? Now, when the trend was going on, you can see that the trend was making higher high and higher low, higher high and higher low, right? Now the trend makes another higher high here and makes another higher low, right? Now this place that the trend makes higher high has formed the left shoulder pattern. Then the trend moves again and makes another higher high here, right? And then breaks below, right? And comes back again and makes another higher high and then breaks below. Now if the trend is still in progress, the trend would have continued making higher high and higher low, but because of the fact that the trend could not move any further, it forms a left and right shoulder with head. So once you identify the left, the right shoulder and the head, you know that the trend is about to change direction, because the next thing you have to do is to draw a neckline at the lows, right, and wait for a breakout. If the price eventually breaks below these lows, it means that the trend have changed direction and you are going to ride massive trend. Just imagine that you are joining a new trend, right? Just think of the distance of that trend and think of how much you are going to make. This will give you a powerful risk reward ratio, which means you are risking 1% to make 20% or even 30%. So this is how powerful this strategy is, and you can trade this strategy in any time frame, whether the 5-minute time frame, 15 minutes, 30 minutes, 1 hour, 4 hour, or even the daily time frame. You can trade this in any time frame you want. It is not restricted. So you trade it in any time frame that rhyme with your style of trading. If you're a scalper, if you're a day trader, or if you are a swing trader or a position trader, you know the kind of time frame that you are supposed to use. I've tried that in my previous video, so those of you that doesn't know about that, please take notes that we have different types of traders. We have the scalper, we have the day traders, we have the swing traders, and we have the position traders. So this thing determines the type of time frame that you should be using in your forex trading. So like I said, this strategy works in any time frame that you want to use, right? So the head and shoulder pattern is one of the powerful way to identify a reversal of a trend from an uptrend to a downtrend. Then we also have the inverse head and shoulder pattern. That one is the opposite of the head and shoulder pattern. Now let me give you an example of how an inverse head and shoulder pattern looks like. Now this is an inverse head and shoulder pattern, an opposite of the head and shoulder pattern. So the inverse head and shoulder pattern is from the downtrend to an uptrend. It tells you when a downtrend is about to end and when an uptrend is about to begin. So if you watch, you see that during a downtrend, the price is making a lower high and a lower low, right? Then it gets to this point, the price makes a lower low and then comes here, makes a lower high, right? This point where the price makes a lower low forms the left shoulder pattern. Then the price comes back to this level, tested it, and came down again and makes a lower low, right? Then this place becomes the head, right? Because the price could not break through it anymore. Instead, the price went up again, tested the same level, came back again here, makes another lower low, right? But this time around, the price could not break below the head and then reverse. So if you notice this type of pattern, you know that the trend has come to an end. The downtrend has come to an end and a new uptrend is about to begin. So what do? You simply wait for the pattern to complete forming right before you place your trade, so that you don't get the wrong move. So now that you have seen the left shoulder, you have seen the head, and you have seen the right shoulder. So what do? You now draw your neckline right at the resistance level. You draw your neckline and wait for a crossover. So if the price breaks through the neckline, it means that the trend have changed direction. So you are meant to place your buy trade and ride a trend. So imagine the distance that this trend will travel, and imagine how much you are going to make from this market. Like I said, this strategy gives you a powerful risk reward ratio, where you are risking 1% to gain over 20% or 30%. So this is a powerful risk reward ratio. So even if you lose 3 or 4 times, just one win will recover all your loss, right? So this is one of the powerful way you can identify a trend reversal. This is one of the powerful ways that you can know that a trend is about to stop and a new trend is about to begin, right? Because I told you that a market doesn't move in one particular direction, right? It changes direction. Today the market can be in an uptrend, tomorrow it can be in a downtrend, and the next day it can be in a range. So this is how the market moves. It moves in a cycle, right? So if you are able to understand the structure of the market, you know how to trade the market very well. And this inverse head and shoulder pattern also talks about a break of market structure, because this is a market structure where the market is making lower low and lower high during a downtrend, while in an uptrend the market is making higher high and higher low, right? So what happened if that structure is broken? It means the trend have changed direction. Like now you see that the structure has been broken here, because the market is no longer making the lower high and the lower low. Instead, the market made a reversal, right? So this neckline is what forms the break of structure. If the price breaks above this neckline, it means the market have changed direction, or the structure has been broken. So you have to follow the new trend. So this is how you trade the inverse head and shoulder pattern. Now let me give you another example of the head and shoulder pattern. Now look at it now, right? You can see the head and shoulder pattern, right? Like I said, the head and shoulder pattern is from an uptrend to a downtrend, while the inverse head and shoulder pattern is from the downtrend to uptrend. That is how the trend changes direction. So now you can see clearly that the price is in a clear uptrend, right? Now the price makes a higher high and then makes a higher low, right? Then goes up here again, makes a higher high, comes back here again and makes a higher low, right? Then comes up again, makes a little higher high, but this time around it couldn't get to the head and then started going down again. So this low becomes your neckline. You simply draw a horizontal line at the neckline and then wait for a crossover. So if the price eventually crosses over the neckline, it means the trend have changed direction. So this is how simple this strategy works. So this is another example of head and shoulder pattern. Now from here now you can see the market is in an uptrend, right? From here you can see the market is in an uptrend, making higher high, higher low, higher high, higher low, higher high, right? So now you clearly see that the market is in an uptrend. So how do you know if the trend is about to change, if the uptrend is about to change into a downtrend? Is when this market breaks below this low, right? Because the market was clearly in an uptrend, making higher high, higher low, higher high, higher low, right? And then went up again. So this becomes the left shoulder pattern, right? And this becomes the head, right? So you have to wait for the pattern to complete. You have to wait for the pattern to form, right? Don't just place your trade blindly. You have to confirm that the head and shoulder pattern has formed, because now we have identified the left shoulder, we have identified the head. So we are now waiting for the right shoulder. Like I say, you must wait for the pattern to complete before you can confirm that the trend is about to change, right? Now, if you are that type of person that is too eager, right, you are impatient, you don't want to wait for the pattern to complete and you place your trade, man, you are going to get it hot, because definitely the market will go against you. That is why I said you must wait for the pattern to complete forming before you can confirm. Now look at this example, right? Look at this example, right? Now, like I told you, the market was clearly in an uptrend, making a higher high, higher low, higher high, higher low, higher high, higher low, right? Now, if you are desperate, and you don't wait for this pattern to complete forming, and you place your, maybe let's say, your sell trade once the candlestick crosses below, a little below this neckline, definitely you are going to get a fake breakout or a false breakout, right? Because once the market comes down, it can go below this neckline a little. So if you are desperate and you place a sell trade, definitely you will get a false breakout. So that is why I say you have to wait for the formation, for the pattern to complete forming before you can confirm that the trend is about to reverse, right? So this is another example again. Now you can see that the head and shoulder pattern has complete forming, right? It has complete forming. So now we can now identify the left shoulder, we can now identify the head, and we can now identify the right shoulder. So this is the right shoulder that I was talking about, right? You must wait for it to complete before you can confirm. So since we have seen the left shoulder, we have seen the head, and then we have seen the right shoulder, we can now say yes, the trend is about to change direction. So what gives us the confidence or the confirmation that the trend is about to change direction is when the price breaks below the neckline. Because once you identify the left shoulder, you identify the head and the right shoulder, you simply plot your neckline at the lows, right? And then wait for a breakout. You simply plot your horizontal line at the neckline and wait for a breakout. So if price eventually breaks below the neckline, you confirm that a downtrend has begun and you place your sell trade immediately. I promise you, you are going to ride massive trend, because one, you have identified the end of the uptrend and you have identified the beginning of a downtrend, right? So for you to start the trend, it means you are going to ride massive trend, and massive trend means massive profit. Like I said, risking 1% to gain over 30%. This is powerful risk reward ratio. So this is how you identify an end of a trend using the head and shoulder pattern alongside with the inverse head and shoulder pattern. So the next chart pattern that you can use to identify the end of a trend and the beginning of a new trend is the double bottom. Now this is how the double bottom looks. It looks like the shape of a W. You know how a W looks like. That is how a double bottom looks like, right? So when you identify this type of pattern in a market, you simply know that the trend is about to change. Why? Because the downtrend is becoming weak, right? Because formerly the downtrend was making a lower high and a lower low, and then suddenly the downtrend became weak, right? It couldn't go any further, and instead it formed a W shape. So when you see this W shape, it means that the trend has changed direction. So now this is how the shape of a double bottom pattern looks like. It looks like the shape of a W, right? And it tells you that the downtrend is coming to an end and uptrend is about to begin, because a double bottom is a trend reversal pattern from a downtrend to an uptrend. So when a downtrend forms this W pattern, it knows that that downtrend is about to end and an uptrend is about to begin, right? So what do? You simply plot your horizontal line at the neckline. So this place becomes the neckline, and you wait for a crossover or a breakout of the neckline for you to know that the price have changed direction and a new trend has begun. So with this, you can be able to ride a new trend, right? So this pattern has over 90% win rate because the probability is very high if you identify it and if you wait patiently for the pattern to form. Like I said, you must wait for this W pattern to form before you can confirm that the trend has actually changed direction. Very important. Now let me give you another example of how a double bottom looks like. You can see that the price is clearly in a downtrend, making lower high and lower low. So this is the lower low, this is the lower high, this is the lower low, this is the lower high, then this is the lower low, and this is the lower high. Then suddenly the price stopped making lower low and lower high, right? And instead form a shape of a W in a downtrend. So once you notice that a price has formed a shape of a W in a downtrend, it means that the trend is about to change. It means that the downtrend is coming to an end and a new uptrend is about to begin. So how do you trade this type of market? You simply look at the resistance level, which is the lower high, right? So now the price is making a lower low and a lower high, lower low and a lower high, lower low and a lower high, right? Now if the price now comes to this lower high, right, and couldn't go below this lower low, right, if the price makes a lower low here, then makes a lower high, right, naturally if the downtrend is still in process, the next lower low was supposed to break this lows and goes lower again. But if the price does not break this low, right, and instead reverse from this low, it means that this place has become a support level. It means that the price could not go below this level anymore, and this place where the price reverse becomes the resistance level. You see how it works? Then what do? You simply wait for the price to come back to this resistance level. So if the price is about to reach the resistance level, you draw your neckline, right, and wait for a crossover. So if the price eventually breaks above this neckline, it means the downtrend has ended and a new uptrend has begun. So you cannot be able to ride this new uptrend. It means you started the trend, right, and you are going to enjoy the fruit of this trend. Like I said, this is a powerful risk-reward ratio because you are risking low and you are gaining higher. Let me repeat it again. Now you can see clearly that the market is in a downtrend, right, making lower low, lower high, lower low, lower high, lower low, lower high. The market is breaking the previous low, right, breaking the previous low, telling you the market is clearly in a downtrend because the market is breaking the previous low. But if eventually the market stop breaking the previous low, right, like this is the low and the market makes a lower high here, naturally the market is supposed to break this low, right, but instead the market goes to this low and then reverse, right, forming a shape of a W. This is how the W looks like, right? So once the market comes to this level and couldn't go below this low, right, and then reverse, it means that the market is about to form the shape of a W. And what do? You simply plot a horizontal line at the resistance, which makes it a neckline, right? You plot a horizontal line here, and then you now wait for the price to cross over this neckline. So if the price eventually cross over this neckline, it means the trend, the downtrend have changed. It's no longer a downtrend, but a new uptrend has begun. So this is how you identify that a trend is about to end, and then you can be able to ride a new trend. The most powerful thing about this strategy is that you enter the trend when it's newly formed. right? You don't know how long the trend is going to go, but the sweetest part of it is that you enter the trend when the trend is newly formed. So what do? You simply trail your stop loss, right? How do you trail your stop loss? You move your stop loss a little bit as the trend is going in your direction, right? This is how you trade using the trailing stop loss, or you can use the moving average. So whenever the price crosses the moving average again, you know that the trend have changed direction. So the sweetest part of this strategy is that you are following the trend. You enter the trend when it newly formed, and you are going to ride a massive trend. So that is how you trade the double bottom pattern. Now let me give you another pattern that you have to use to identify that the trend is about to end, and this is known as the double top. The double top is the opposite of the double bottom, right? They work the same thing, but just that they are opposite. Like I said, the double top and the double bottom work the same thing, just that they are opposite, right? Like the double bottom tells you that a downtrend is about to end and a new uptrend is about to begin, while the double top tells you that an uptrend is about to end and a new downtrend is about to begin. So you can see that they are almost the same thing, just that they are opposite, right? Now to identify the double top, right, you identify the double top at the top of a trend, while you identify the double bottom at the bottom of a downtrend. You identify the double top at the top of an uptrend, and you identify the double bottom at the bottom of a downtrend. So now if you notice that the price is making higher high and higher low, higher high and higher low, it means the price is clearly in an uptrend. So how do you notice that the trend has come to an end? Is when the price could not break through the highs and instead form a double top. So once it forms a double top, it means that the trend has come to an end and a new downtrend is about to begin. So now if you watch clearly, you see that the price is clearly in an uptrend, making higher high, higher low, higher high and higher low. But this time around, it couldn't go above these highs. Remember before, the price makes a higher high. This was the previous higher high, right? And this is a higher low. So the next move, the market crossed above the previous higher high and went high again, right? And then makes a higher low. So that higher low and the higher high are almost the same level, right? It shows or tells you that the market is clearly in an uptrend because the price is breaking the highs, yeah, breaking the highs. But if the price suddenly could not break the highs anymore, right, it tells you that the trend is becoming weak. And once a trend becomes weak, what happened? The trend will eventually change direction. So this is the example here. You can see the price is making higher high, higher low, higher high, higher low. So once it gets to this level, the price could not break through these highs again, right? So this is it. The price makes a low and came to this high, but could not go above these highs again. Rather, it reversed from this high and started rallying down, forming the shape of an M. Remember that in a downtrend, it formed the shape of a W, while in an uptrend, it forms the shape of an M. You know M, W. So how do you identify this? In a downtrend, you look for the shape of a W. In an uptrend, you look for the shape of an M. So this is how a double top and double bottom sharp pattern forms, right? In a downtrend, you look for the shape of a W. In an uptrend, you look for the shape of an M. So once the price could not break these highs, right, you know that the price is about to reverse, right? So what do? You simply plot your horizontal line and then map these lows. These lows becomes your neckline. So you place your horizontal line at the neckline and you wait for breakout. So if the price comes back and break below this neckline, it confirms to you that the trend have changed direction and you are meant to ride the trend, right? So you are expected to place your sell trade once the price breaks below the neckline, you expect to place your sell trade and then your stop loss above, and then you'll be able to ride this massive trend. The sweetest part of this is that you are entering the trend when the trend newly formed, right? And you don't know the distance that this trend is going to travel. So if you are a patient trader, right, if you're a patient trader that can hold trade like a swing trader or a position trader that can hold trend, you don't know when this trend is going to end, right? So this gives you a powerful risk reward ratio. You are risking 1% and you are gaining 30%. So this is one of the most powerful way to trade the market, right? Just imagine that you are a market man or a market woman, right? And you bought a goose, right? You bought a goose for, let's say, $10, right? You bought a goose for $10 and you sell that goose for $200. Is that not a powerful gain, right? You bought something at a rate of $100 and you sold that at a rate of $2,000. Is it not a powerful gain? So this is how this strategy gives you a powerful, massive profit, because you are risking low and you are gaining high, right? Because your stop loss will not go more than 40 or 50 pips, but your take profit can go 500 pips. So imagine the powerful risk reward ratio that you are going to accumulate from this setup. So that is why I said that this setup is one of the best if you know how to identify them. So my advice for you is to go to your demo account, backtest this strategy, backtest it very well before you implement it in the real market. So what I'm sharing with you is different strategies that I have used which is working for me. So my advice for you is to backtest it in your demo account, and if it works for you, you can use it in your real account. My goal, my mission is to make everyone profitable in the forex market. So I will not be happy that you enter the market and lose your money, because I have lost so much when I was starting, and I wouldn't want you to do the same. So that is why I always advise you to backtest every strategy that I give to you on a demo account before implementing it on a real account. Thank you very much for taking out your time to watch my video. I think we have come to the end of this tutorial. I hope you have learned one or two from this video. Please, if you love this video, give us a like and also subscribe to this channel for more educative content like this. Don't forget to share this video on your social media pages. Don't forget to come back for more updates. Like I promise you, I'm going to be updating you guys with educative content, and if you are stick to this channel, I promise you before the end of this year you are going to become a pro forex trader. Thank you very much for taking out your time to watch my video. I will see you again in my next update. Bye.